Hi, everyone. My name's Afua Santua, and I am an MBA candidate currently at Johnson. And I'm here to introduce our panel that we have, our final panel for the day. And it's going to be about innovative and sustainable finance in post-COVID Africa. So as we all know, ESG remains a crucial theme for investors across the globe, with nearly $500 billion having been invested in ESG integrated products in 2021 alone. However, there has been much debate as to whether companies employing ESG metrics are doing so in sustainable ways, leading to one question: how investors should consider ESG factors. Paul Kavuma, the CEO and co-founder of Catalyst Principal Partners, and Farida Usman, director of Kuruma Capital Management, um, will share their perspectives on innovative and sustainable finance in East African economies. And this will be moderated by Dean Caroli. And also we're having Rob Carniceris join the panel. So thank you guys so much.
Thank you very much. I appreciate it. Okay. All right. We're going to get to work here. Thank you very much. Can you hear me? Yeah. Still hear me. Okay, good. So we're gonna do this. We're gonna do about 15, 20 minutes. I've got a few questions to prompt you, Farida and Paul. And what I'd like to do is just get your reactions and thoughts. And then the idea is to draw some questions, or do we have somebody to run a mic for the audience, Mark, in case questions arise, or I'll just go out in the crowd. I'll just go out in the crowd if questions arise, okay? 1.7 billion people, $6.7 trillion in the African economy, and are quite arguably one of the largest growth potentials on the planet. So I'm going to quote you. There's an IFC study that I was looking at before this. You guys are working in this space. And it talks about post-COVID, how there's been a tremendous slowdown in private equity venture capital activity in the emerging market space. A lot of it is because a lot of the portfolio companies that are being funded by the VCs are struggling, and they just are. They just are. They're coming back now, but they've struggled across the emerging market space. But this study, this IFC study I'm looking at, talks about the incredible resilience of the venture capital space in Africa. And I think we are owed an understanding from people who are on the front lines there to try to explain to us why these portfolio companies and the whole space, the whole ecosystem has been so resilient relative to the rest of the emerging markets. So it's sort of, let's call it the paradox that needs an explanation or some better understanding. So should we start with Farida, Paul? For Farida, why does it work better?
Why does it work better? Wow. Okay. So let me try and sort of lay the land. So venture capital in Africa as of last year did about $4 billion in deals. And as of this year, we've already sort of hit, I would say, I think already 4 billion in the first half of the year.
Yeah.
And so you sort of seen a lot of activity, both from within the continent, so local capital providers investing in venture deals, angel investors, HNIs. And what is very interesting, intriguing, is what you're talking about, where we've seen international firms, the Tiger Globals, the T Associates, coming into Africa and finding these companies and investing in them. Why? I think one of the things that we sort of speak about is post-COVID Africa and what that meant for us. I think COVID was the opportunity that Africa was waiting for, I think, when it comes to technology and leapfrogging technology. It allowed, for really innovative entrepreneurial talent to think through problems, because there were a lot of challenges. They've been before COVID, obviously, but we really saw that leapfrog beyond fintech, which was where most of the opportunity was coming from before COVID, where you sort of saw a leapfrog in edutech. You saw healthcare technologies because, there was that same mandate, that same need to sort of connect people and, provide opportunities to those that were far reaching and that, rural areas where they're not able to sort of come into the urban space. So I think that was one thing that happened, was that connectivity.
A broadening
Exactly.
of the types of companies. that are being-
Exactly. So it wasn't just fintech, mobile money that we'd been seeing before. You sort of saw more across the space.
I think that's right. So Paul, anything to add there?
Yeah, look,
Resilience.
yeah, look, I wouldn't say we were not unscathed by
Yeah.
COVID. I mean, we had, if the numbers that Frida spoke about the rebound, you have to also, the rebound from where? So, we had 4 billion of capital in 2019 of new capital coming into the market. It went down to $1 billion in 2020.
Right.
So the rebound to 4 and now to 7 is coming back off that very, very deep J curve. Okay. And some of the conversations we've had today about the flight of capital. I mean, the institutional investors sort of disappeared. Coramos of this world are a rare breed, a fund of fund, which is focused on mobilizing capital from institutional investors purely for investing in funds like ours that are investing in Africa. It's sort of, so the value, sort of the ecosystem is not self-sufficient yet, right? We're still highly dependent on international capital flows, which are very volatile.
Yep.
So we get overly penalized when things are bad.
Yep.
Right?
Yep.
But the opportunity is that the swing back is also strong.
Exactly.
Right? So, we've had lots of casualties, I should say, but the defensive sectors, the health industry, the food industry, the education sectors, housing, there's some sectors which have been bright spots and have been highly resilient because it hasn't overly affected local demand.
Yeah.
Local demand has remained strong.
Can you talk a little bit more about competition? So you heard the framing of this session. It's talking about the fact that the focus on, or the I don't know what to call it. It's sort of a pivotal focus on sustainable and ESG in this space seems to have been part of this shift away, not away from fintech, but the broadening of the sectors of the portfolio companies to focus on healthcare, on food production systems, and things like that. Is it part of this sustainability mission that we're seeing everywhere else in the emerging market space or around the world, or is it something special?
So I think this new ESG sort of craze that's sweeping the market, it's very interesting because when we sort of started investing in Africa a decade ago, ESG was very much part of the discourse. It was very much, fund managers, portfolio companies that were investing in, were sort of taking ESG front and center alongside how they were thinking about investments. And that's because of one unique thing, I think, when it comes to the African markets, is the presence of development finance institutions. The BIIs of the world, the FMOs, which is the Dutch MDFI. And what they did, over a decade ago in fund managers, like Catalyst and the like that they invested in, was really inculcating those ESG values, making sure that the companies that the fund managers were investing in were also along the lines of sustainability, ESG, and really, drilling that into the mind of the ecosystem. So the idea, now that the rest of the world is sort of catching up to incorporating ESG to investing, is something that we have been doing. I know that Catalyst has been doing that for at least a decade now.
So the DFIs, the development finance institutions, have been
Yeah.
part of the conversation for a long time.
They make up 70 to 75% of the capital that flows through Africa private equity and
IFC
venture capital. The IFC is one of
report
the
talks
largest.
a lot about the DFIs
Yes.
in Africa. Yeah.
Yeah, I was going to say you all are late bloomers, right? We've been at it for 15, 20 years in Africa. We're teaching you all a lot about this. And in fact, I'd even say that we're going to another, in Africa, we're moving to another level, which is all about impact, not just ESG, which is generally internal within the business. Are you, safety standards? Is it governance standards? Is it, think within the organization? Increasingly in Africa, we're beginning to think about what's our impact on society, on community, what's the domino multiplier effect. And so this is a whole new thing that is going to come to you to a movie, to a cinema near you. You're going to see this. It's coming from Africa, and it's coming from us. And I think it's important. Most of us who are in this space are in it not just for the returns, we're in it to make an impact. So for us, this is a welcome evolution.
I think that's fantastic.
And I think
That's why he won the award.
um,
For the cool kid, that's right. For the
And I
cool
think-
kids, they talk about it. They call it blended financing. Blended financing, which is talking about the DFIs with the private partners, like the LPs, as really the drivers, and how Africa seems to be so far ahead on this particular dimension of blended financing in VC space.
I think what's interesting about that is typically you would expect DFIs to sort of go through, sort of go into these funds, with a blended finance mindset, which is where you sort of take a hit on the commercial cap and returns, and you're all, you're just going in.
Do you?
Well, that's the point, right? DFIs are, very much aggressive. They're thinking very commercially. With it's unique. I think that's very unique to what we're seeing in Africa. But to Paul's point about Africa sort of leapfrogging when it comes to innovative and sustainable investing, we've actually now moved from a point of impact investing. I heard a new phrase last week called JEDI, which is justice, equity, diversity, and inclusion. So
There you are.
There's a new ESG.
It's the new,
That's the new ESG Jedi.
ESG plus plus. And so it's not
Yes.
just looking at impact, when it comes to, broader terms, but also like diversity and equity and inclusion. And, a lot of, again, DFIs are the ones
Yeah,
pushing this.
they're
And,
pushing it.
and so coming to a cinema near you.
I love it. So I'm going to stand up so I can read the questions to you. It's hard for you guys to see the board behind you. But as I'm about to read, and I know somebody's going to watch the clock on me, right? Yeah, you're watching the clock. So one of the things that they talk about is the challenge of the venture capital space and the private equity space in Africa is still the exits. That's what the report focuses on. The challenge is still the exits. The trade buyout space is still limited in scope, and obviously the public exit is still limited. Do you want to affirm, confirm, comment,
Yeah.
react?
No, look, I think it is. It's got some truth to it, and I think this is partly because of the context, right? So when the first private equity sort of VC funds came to Africa, we sort of tried to adopt the American model. Sort of, we're going to go in 3 years, gearing, a bit of, clever financial modeling, and then you come up with 5x after 3 years. And in our economies, that's difficult because we're in growth environments which are harder. It takes a bit longer. We don't have the level of gearing and financial instruments that you have in other markets. So to get those returns, you tend to go longer. Right. Secondly, the private equity models are very sort of, again, the 2 and 20 and the 5-year investment horizons, and sometimes we push the envelopes on those because to get the optimal returns sometimes, and to get scale, again, sometimes takes longer. So we are the ones at the front line trying to challenge this model again and saying it's not that the exits are bad, but actually they're building businesses of scale. So it may take a bit longer, but it has had an impact, because in the year 2020, where the institutional capital flows were also shy, all the DFI investors who were long private equity also started to get liquidity pressure because the exits weren't coming back. Right. So we have to think about this and figure out how to either tweak the model, in my view, a little bit, to try to make it more relevant for how businesses are growing and being able to build regional champions of scale over a longer period of time.
Yeah. So go ahead, Fareed.
And I think in addition to that, tweaking the model, it's also sort of learning from our mistakes. So when you talk about, private equity and venture capital in Africa being new, I mean, this is really just less than 30, I would say just a little over 2 decades of, of sort of these sort of local firms investing. And one of the things that we're seeing that our fund managers are learning is you have to create your exits. It's not it's not that idea of, there's some large firm or some large financial buyer that's going to come out there and, find you in the middle of Nigeria, and, that's not how it works. So you're going into the companies with the mindset that in addition to whatever other value creation levers that you're going to utilize, you're also seeking exits for those companies. And we're seeing, managers, sort of rise to that occasion. We're definitely seeing, so, it's going in rather than, saying, I think before we would see what's your exit strategy, and it's the same list: trade sale, IPO, and now we're pushing back and saying IPO where? Like, because
Exactly.
everyone's just
So
gonna, it's not that easy.
that's a great one because it leads into the first question up there. And I know you're the right person to answer
Ooh.
this one. So it says, is there any constraints to investing in VC in Africa? Let's say I'm based somewhere else, like LATAM, or so I'm an LP, I'm based in LATAM, perhaps here in the US, and I know you're dealing with LPs from all around the world, driving them to Africa. So why don't you comment on the extent to which that's happening and the challenges associated with that?
So our investment philosophy is hinged on local presence. And, I think it's very important that, it's the degree to which you're looking to invest in Africa. I think, it's not one of those markets where you can sit, in London somewhere and you're just gonna you need local partners, right? That's what I'm trying to get at. And it's, more and more as the private equity venture capital ecosystem is growing, you are finding those local partners.
Is it the only way in or the best way in?
It's the best way in. It's not the only way in. I've definitely seen some success,
Okay.
but to sort of cover your bases, I would say local partners like Kuramo, because for a lot of our investors, we represent, their exposure to Africa. We consider ourselves to be the CIO of for Africa for a lot of our investors. And it's, because this is a long-term play. It takes, if you're new to investing in Africa, you will need, a few years to even learn the market and understand the market, because Africa is not a country. It's very different. Like if I were, looking to invest in Kenya or in East Africa, I would go to Paul. We're both African,
But he's got local
but
knowledge.
he has exactly. And if
Knowledge.
Paul, if you were to want to invest in West Africa or Nigeria, you wouldn't just go there and get on a plane. You would have to find a local partner. So because these markets are so nuanced, I think that it's important that local insight is prioritized, and that's what's going to get you the best returns.
So one of the things we talk about as the key learning for a lot of the EMI fellows since the very beginning, and the reason why we launched this institute, is because while there is these local nuances that you're talking about, Farida, we see there's strong commonalities in sort of institutional structure that guides this. And so are there in fact commonalities in institutional structure across different markets in Africa, sub-Saharan Africa, East Africa? And how differentiated are there such that this important local knowledge is key? I guess you're the local guy.
Yeah, look, I mean, I think there's some common themes somewhere in the room today. We heard about there's some big picture themes. Africa is growing. Africa, the youth dynamic is driving the next generation of opportunities. We got urbanization, rapid growth of, so there's some general themes which are relevant across the continent. But the point Farida's making is that, traffic in Nairobi is not the same as traffic in Lagos. It's just not this. There are some things which are really nuanced about the markets where local knowledge is useful. I'll just make one other point, which is the other thing that we're going to have to do, those of us on the ground, better, is actually to mobilize more of our own capital from within our markets. We have a high dependency on coming to New York and London and people, and try to first show them where Africa is on the map and convince them that then who's this Paul Kavuma guy? Then it's just there's so many things, so many impediments, and when the markets are tight here, they disappear. So there is an obligation. Okay, we talked about some numbers. We talked about $4 billion so far capital invested in Africa this year. In Africa, okay, I think the lady who was a speaker earlier today said she's managing $25 billion fund, right? If I look at my local pension fund industry, if I look at even the Kenyan pension fund industry. It's $15 billion growing at 13, 14% year on year. They're generating a couple of $1 billion of new savings every year. Why is it so difficult for us to raise $4 billion
Mhm.
for investment in Africa when we have institutions that could do this in a day? Right? So on one hand, what we've been trying to do is bring international investors so that they can give exposure to our regional institutions about the asset class.
Yep.
So we're constantly trying to teach and educate about the asset class. But the mobilization of local capital will bring more sustainability and less of these swings and roundabouts
Yeah.
that we're facing in the market.
Yeah, this is really helpful, actually. There's another one here. This is going to be for you again, Frida. What would you recommend for countries who still need to adopt the Jedi goals? I think they're asking for some sort of differentiation. They're picking up on your lead.
Just told you, I just learned about it. It's
Okay, so we're well. I mean, but the concept, right? The concept. Which countries I think are further ahead, and which ones are a little bit lagging?
in Africa.
Yeah, I think that's what
Yeah.
I'm.
I think, I think one of the biggest diversity and, sort of Jedi themes in Africa is really going to be around gender diversity. I think that's, that's where the greatest gap is. Even though interesting enough, the racial diversity of our venture capital industries are, sort of very interesting because we're not seeing as many indigenous African sort of founders as we would like, making it to unicorn starters. That's a different panel. I think when it comes to gender diversity, you're definitely seeing, I mean, take countries like Rwanda, where the, representation of women in parliament is probably, I think, the highest in the world at this point. And that's sort of, that is sort of, translating to the private sector, to the businesses that we're seeing, the founders that we're seeing. It's this, so the Africa sort of gender finance gap is currently, I think, $42 billion. One of the ways that we at Karama and a lot of our peers are thinking about how to plug that gap is by investing in more female fund managers. So, this same problem that we're facing in developed markets where female fund managers are 2% of the industry, in Africa, I think we have, it's about a percent or 0.5% of the industry that are actually able to raise institutional capital. And so we're approaching that because the way our industry, has worked is, the private equity, the venture capital funds are the ones that are helping, that are then further investing in portfolio companies and are really helping to, sort of develop the SME ecosystem. We believe that, if we tackle it from that top-down approach, you're going to see more investments in female founders, female-led companies, that's going to ultimately benefit more sort of female entrepreneurs and, help, sort of just get
Just general inclusivity into
just
the whole
include
business.
exactly,
Right?
and you're going to see more diversity on boards. But I would say, some countries, Rwanda is definitely leapfrog. You definitely have South Africa, which has gone beyond that because they have the black economic empowerment policies that have
Right.
really sort of pushed that
Right.
forward.
Yeah, no, those are good. You've listed off a bunch there. My goodness, these are such beautiful Cornell values that are being expressed here, right? About the inclusivity and the importance of that to be able to fuel this going forward. How about one last one? One last one? One last one? Oh, you're gonna ask? You want? Okay, I'm gonna come over there. Okay, then I have to repeat. Okay, go.
I'm wondering kind of what questions or what dialogue you'd like to see from both sides, right? We've got developing nations kind
Yep.
of on one side, the developed nation on the other, and so how would you like to see, I guess, a fruitful dialogue come about so that in relation to the rest of the
Everybody heard it over there too? COP27, Sharm el Sheikh next week. Comment.
Yeah, look, again, I just want to reference a conversation we had yesterday in the committee where, questions of, um, perspective were raised, right? And if I look at what's going on right now, I mean, I'll give you an example. In Uganda, we have massive oil deposits. Okay, massive oil deposits, which after 10 years of waiting, we finally got to financial closure to be able to extract the oil, get the oil and be able to evacuate it. But in the world of climate and in the world of responsible investing, there has been Total has got the was the award winner, but all the French banks have refused to fund it. So now we're in an environment, we're going to a global recession environment where inflationary pressures are coming, et cetera, and the main commodity which is going to protect the economy against the flows of the vagrancies of the international capital markets, we can't exploit. Okay, so what's the right answer? What's the right answer? Should we be funding oil exploration? So when I think about what is the developed world and the developing world, we do have conflicts, and they're legitimate conflicts. They're legitimate conflicts, right? I was at a conference in Qatar about a month or two after Russia had invaded Ukraine. Is this Chatham rules?
It is Chatham rules.
Okay.
And I assume that's a rhetorical question you're
Chatham
throwing out there to hang over the space, right?
Okay. And, there was a massive presence of the US. A number of your senators were there, a number of CNN celebrities, and all these people were there. And suddenly Qataris who had been held to account for not necessarily having the most progressive human right issues is suddenly the second largest producer of gas in the world, where I can tell you, I've never seen US senators sucking up to Qatari sheikhs like I saw at this conference.
No names, please.
Yeah, I'm not going to say, but it was palpable. I mean, and the Qataris were beginning to say things on stage that were like, if they said that stuff 2 years back, they would have been cut off and sanctioned, and all sorts of things about why were you in Afghanistan, and there were so I don't know what the right answer is. I'm sort of
You're putting the question out there, which is the important thing.
Yeah, that perspective is everything, right? And so the dialogue must be robust because the emerging economies must evolve, and it's in all of our collective interest for the emerging economies to evolve and be responsible and all the other things. So that's my long-winded answer.
As I picked up on something that Paul just said, that phrase collective interest. I think for me, the one dialogue that I would want to sort of see come out of COP20 of the meetings would be like who funds the R&D, who funds the technologies that are going to make this affordable for African countries, right? We all sort of have a collective interest, but we haven't all sort of caused the problem. So I have a problem with, industrialized countries that are sort of make a bigger proportion of the problem, coming to Africa and having these prescriptive sort of, policies and saying you need to do this, you need to sort of, get rid of your oil production, things that could cut the legs of these economies, things that are, sort of policies and, prescriptions that are really outrageous and expensive, and then you throw a $5 million grant at it. Yep. Right? You're asking for an infrastructural overhaul of these countries. How do we fund that? It's by making technologies like giving African countries, giving developing countries access to this research, to this like R&D efforts that are going to make this cheaper. You want me to go solar? You want me to like make it cheaper, right? How do we do that? How do we fund that? That's the only way. But it doesn't make sense for John Kerry, for somebody to get to Nigeria and say, you need to do this, you need to do that, you need to do all these things, but who's going to fund it?
Exactly. So this is part of the post Paris Accord hangover. right? You're not saying it, but the arrogance of the developed world with respect to all of this, and I think that, anyways, I want you to close, each of you, 15 seconds each, with a reason why you're really optimistic about the opportunities that are presented by the
Never
African
said
continent.
anything for 15 seconds, but
25
a
seconds.
lot of pressure. I think if you take a long-term view of Africa and developing markets globally, there's a lot of optimism. 80% of the world's population growth is going to come from Africa. So Africa is the workforce of the future, right? You have a population that is, half of the population in some of these countries are under 18. So you really have these demographics that are looking, sort of long-term view to the potential. And, with more and more sort of, capital recognizing that it needs to diversify and we need to build these industries, I'm very optimistic that, Africa is finally going to be the next frontier.
Paul, beat that.
Yeah, you'll need us. You're going to need us more and more. And one of the conversations earlier, I think the dislocation of the supply chains and all that sort of thing is giving a lot of opportunities in Africa to localize production, localize technology, localize our supply chains, and so the expertise is coming, and the scale will be built, and we will. While the world is figuring out what it's doing, I think we will see an interesting and productive and hopefully um, great return environment in Africa over the next decade.
Farida Usman, thank you. Paul Kavuma, thank you, and congratulations. And Rob Canizares, thank you for your inspiring leader. Who do I hand it off to?